Hey guys, yeah, so with the end of the year approaching, I just wanted to do a quick video to highlight a couple of important topics in the world of real estate mutual funds. So the first is tax loss selling. I'm sure you're aware that many real estate mutual funds are down, anywhere from 20 to 30% for the year as higher interest rates have really pressured prices for many subsectors of the market. So assuming you have gains in other parts of the portfolio, you can sell some of these real estate funds at losses and offset those gains. So then, the bigger question is, how do you replace that real estate exposure? And so one of the things that I really wanted to point out was if you look across the market for these real estate mutual funds, most of them have commercial real estate type exposure by owning equity REITs, which own property types ranging from office buildings to hotels to retail spaces, and we think this is a dangerous place to be invested going into 2023 because interest rates are poised to rise further and really linger at relatively high levels for potentially a prolonged period of time. And this is going to pressure cap rates. It's going to pressure financing costs, and we could just be in a stage here of not needing as much commercial real estate as we did, in the past. And so, in our mind, the best place to be invested on the real estate side right now is in residential mortgage credit. Residential mortgage credit, we think, is going to have more stable fundamentals versus commercial real estate for a variety of reasons. And you can express this view in a couple different ways. I mean, you can own residential mortgage-backed securities. It's a market that I've traded, for over 15 years. But I think the better trade is owning residential mortgage REITs. Anywhere from common shares, up to the corporate bonds. And if you look at the common shares right now, I mean, residential mortgage REIT common shares are trading at massive discounts to tangible book value on average and are paying dividend yields ranging from 10 to close to 20%. So our mutual fund, it's one of the best performing real estate related mutual funds in the market this year. Looking back at a period like 2020, we were also able to successfully navigate, the volatility at that time because we identified, a lot of the fundamental risks in the market, which at that point was excessive leverage. At this point, we think it's commercial real estate, and so you really want to pay attention to some of these risks at this point. So overall, my advice is get your tax loss selling done and look at buying funds that are really focused on mitigating risks, but at the same time exposing you to potentially big sources of upside going into 2023. So that's it. Good luck investing, and reach out to me with any questions. Thanks a lot.